Bring that ass back like a boom, 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 boom.
Hey, what's up, everybody? Happy Sunday. I'm Supernova, and you're a Boom Traders weekly overview for the last week of February or week 8 of 2022. As usual, we are going to start with our session overview where we've listed the risk vest, tactical trading environment, the current market, and summary of what is going on. Now, the first thing I want to point out, you will see that here we have some neutral signals being changed from negative last week. That still does not mean we're going aggressive. This is just a reflection of what we're seeing in the market. So we still have our sell signal as of last year, 22nd of November, active. The general market, as you see, we haven't changed it to neutral because although we had a bounce for the last 2 days of last week, the market hasn't done anything to prove that at least has gone out of the woods. We are still in danger. We can still break below the current support zones and we'll be in trouble. So the general market is still on negative, although the up-down volume is on neutral, the new highs, new lows, and stock participation as well are on neutral. Okay, let me just explain what we mean by this. We saw that although the market has been bouncing lately, some groups have been not participating, to put it mildly, in this bounce. Groups like XLK, XLC, which are technology and communication, have been beaten down. However, this really changed with the last 2 days of last week, meaning that even groups that haven't seen any bounces as of recently have tried to show some positive movement. That's why we moved all those signals to neutral. Now, that being said, we're still very careful and our tactical trading environment is on yellow. As you can see here, markets are highly rotational and can trade but with caution. We are still waiting for a follow-through day if we want to be 100% going by O'Neill's rules. But there are some breakouts that are working. We're not loading the boat, as they say. We're not trading highly aggressively, but you can try some trades. Now, if you want to bottom fish, last Thursday and Friday were good opportunities for you. You saw that huge reversal on Thursday that could have given you some opportunity to trade those reversals. And you saw a follow through on Friday. So the market continued for 2 days straight up. This hasn't happened quite in some time. So that was an opportunity to trade. As you know, I've held some trades over the weekend, and we also have some trades that are active in our Boom portfolio. So we'll see how the market opens on Monday. But again, caution is advised. We're not out of the woods. This is not a safe environment to trade breakouts. Last but not least, just a reminder of what we include in our tactical trading environment is a checklist, and you can go over those. We repeat them pretty much every week, but these are the things that we go over every single week to basically come up with a tactical trading environment to see. All right, so moving on, we want to talk about a little bit about the current markets and starting with the major indices, gold, crypto, oil, and bonds. Then we have some market internals, index, top and bottom in industry groups, geopolitical issues, and summary of the entirety of the market. So the first thing I want to talk about is are the indices actually, and like last time, I'll do it live. I think it's much easier for you guys, and we can draw on charts and stuff like that. So the first thing I want to talk about is the S&P 500, and you saw Thursday. This is Thursday and Friday of last week. We had those huge bounces. Now, as I said, I am thinking that the market will basically undercut the lows and bounce back. So this is exactly what happened. Now, if you are looking at some levels that we hit, you can see that we've been talking about this level right here. We've been talking about these two levels, so I'm just going to put it in the middle. The market tried to pierce those levels, bounce back, and now which is the good thing is we've actually closed above the support zone. So this was a major support zone as we saw here last week and here with huge volumes as well. And you can see it right here. I'll just do a little drawing for you. So you see this zone right here was a major support zone last week, and you can see the volume that's coming out. Like it's really high, twice as high as the usual volume. So this shows support. The other time we actually supported this zone was right here around late February or late January, I'm sorry, early February. And you saw the volume here again, twice as the usual for that. This is the 20 period moving average for the volume, just so you know. So the good thing is that we are above this line again. So we've established this was support. It when we break it to the downside, it becomes resistance. As you know, this flipping support resistance lines. But right now, this is again support. So that's the good news. Now the bad news is that we still have a lot of levels to tackle on the top, but if we're looking at some levels that I'm actually looking for to hold, this is this level right here, formed by this little top bar. Then we have this level right here, which is a major rejection of a double top. So again, we do have some levels to look for, but there's still positive signs from the market, and we'll have to see how Monday goes. I mean, that will be that's shown a lot. So this is the S&P 500. It's not looking that bad right now that we have flipped this line into support again. Now let's look at the QQQs and QQQs. To be quite honest, they look worse than the S&P 500, but again, we are seeing the same flip. So let me just draw this. This here was major support. We had 4, 5 bars closing relatively close to each other with support and huge volume. You see that? Volume is very important in these key levels. This one held right here as well, but this was higher than this. And you can see volume again. Volume is really a telling story for support and resistance zone. You can see, but more for support. I mean, support is really important because as you probably know, prices can drop without volume. All it takes for a price to drop is not enough buying. However, to elevate an asset price above a level, you need volume. And when volume shows, this is usually support zones. Now, we also have relatively high volume coming off of these lows right here. So we are seeing some support. Good news, this line right here, let me just draw the line. This horizontal line right here is again support. We flipped it here with those 3 candles going below it as resistance. And as you can see on Friday, we actually, I don't know if you can see right here, but on Friday we gapped over this line, which I drew on the lowest, it's not the lowest, but the close of this lowest candle right here. So the lowest close of those 5 candles, that week of support, I drew here the support and we flipped and we actually gapped up on top of it. We tried to pierce it back down and we moved back. So this is a huge positive sign. Now let's see how Tuesday will go. Again, we have pretty much the same levels as with the S&P. We have one level right here, and then we have like a top, almost double top here with some gaps in between that is holding, which also happens to be support, now resistance of this zone right here. So there is still a lot of work to do in the QQQ, more than we have to actually do in the S&P 500. Now, as far as Dow Jones goes, Dow Jones actually is behaving much better than the other two. We're still seeing a troubling formation for some, but it remains to be seen how we go from here. So we have one, basically the left shoulder, then we have the head, and then we have the right shoulder right here. So this is a head and shoulders formation, and we're still seeing some trouble. I wouldn't say that we're out of the woods on the Dow Jones, but Dow Jones definitely looks stronger. As you can see here, we are actually holding this zone right here, and we again gapped over it. So we are establishing some major support zones, and they are holding fine. So Dow Jones actually looks okay for now. Last but not least, let's check the small caps, and small caps are trying to come back. They had this actually really nice shorting pattern that you could have shorted right here. So we have a drop, we have a flag to the upside, and once we break that flag, let me just draw it here on the low. Once we break that flag, you can actually short. Now we are having to see whether this test of this rising channel right here will hold. If it moves into it, we're safe so far. If it gets a rejection, it's another leg down. So this is what WM is telling us right now. It's a good thing that they actually held support right around this zone, because this was a major zone right here. You can see this is a major zone. We are gapping up from this zone here, so this shows there is some support right now, and we are relatively well holding it. There's been only one close right here, this red candle. You can see it right here. There's been the only close below this zone, and we gapped down, but then we quickly felt this gap on Thursday. So this is what we see in the major indices so far in the markets. All right, so moving out, we have gold. Gold broke out of this around 2 years base building. So it just broke out with a gap up. And however, when markets find some support, you know that gold is usually sold. So this is what happened on Thursday. Markets gapped down and filled, and pretty much in exact synchronicity, but opposite, gold just gapped up and filled down. So it's a question of market strength to see whether we see this gold going down or up. Now, my guess is that if the markets are actually finding a bottom and going up, gold will suffer. But of course, it's up to see. Another one that was setting up was silver. In terms of the metals, pretty much what we saw with gold. We've been building this base since last year, but with the market rallying on Thursday, we saw a sudden drop in silver as well. Now, another thing that is interesting to watch is how Bitcoin and crypto in general is acting with regards to the market and the uncertainties spurred by these geopolitical issues with Russia and Ukraine, and also China and top. What is important for me really is we've had this bottoming formation right here that we found support around the 29-30,000 level a couple of months, well actually a couple of months ago, and we've then had this rise which was higher than the previous highs set up in April 2021. So these highs here are higher than these highs, and you can see it like a channel. If you can draw like a channel through here, I don't know if I can do it on a Binance platform. Probably I can, but I'm not really versed at using this, so I'm not even going to try to embarrass myself right here. But anyway, what you can see here is we're making a higher high. So this high is higher than this high, and this low right here, this base right here, is lower than this base right here. We had two support days during the recent breakdown of crypto. We had two support days. The lower one happened at 33,000 when we had a buy signal, and then currently we stopped at about 34 and change. Now, it's questionable, and I really want to see a higher high than this one right here, around 45,000. I want to see Bitcoin moving through that $45,000 range to be able to say that we are out of the woods. However, notice that these two highs right here are sloping down, but as you will see with some of the charts that I'm looking at, this is the way that actually breakouts to the upside are supposed to work. And you can see right here, you see we're making lower highs And on top, on the bottom here, we're finding some support. I think this is maybe a 50 period moving average. And we're finding some support here. We're making lower lows, very low volatility here, and then we're up to the upside. We're just makes a big splash to the upside. Now let's see how Ethereum is doing. Ethereum. BUSD is fine. Binance token. And you can see the same thing pretty much in Ethereum. Ethereum has been making like a higher high with the exception of this one. So higher highs, support has been here, now support's here, it's lifting up. Pretty much the same chart as with Bitcoin. So I'm not expecting one to go over too much the other. They just move in pair, and basically they speak for the entire strength or weakness of the crypto market. So again, I would like to see Bitcoin, Ethereum, I'm sorry, about above this 3,200, 3,300 level to be able to say that we are out of the gate. And of course, I want to see some strength on it. It's not just about breaking those levels, it's the way we break those levels. What is really important to note here is that those bottoms right here at about $2,000, they're supported by huge volume. You saw it here, huge volume, here, huge volume. Third time, not so much volume, but also selling, as you can see by the red bars going down. Selling was not very intense right here. So it didn't need that volume in order to support it. Here, you can see that volume is again exceeding those levels for support. So these are major support zones. And if we try to test those in the future, you can probably trade them as bottom fishing, although I'm not a fan of that. Now let's go back and just look at what oil is doing, because it's important when oil, you can see that oil behaves like gold in this case. In Thursday, when the market gapped down hard, oil actually gapped up to 70, but then really quickly fell off 5 points, which in terms of gold, that's like 7 or 8%. So it really quickly fell off those. Now gold is still in a major position to break out to the upside, but this right here is major resistance now, because look at the put. So this is what oil is doing, and last but not least, the bonds, which will mimic what oil is doing in this case. When the market goes up, bonds are going down, and you can actually make a case for a bearish play right here, the one we saw on IWM, and I'll just move back to the chart and show you what I mean. So you had this drop right here, then from here you moved sideways with an upper channel right here, and if this channel breaks down, you can actually short this. Remember what we saw in IWM, small caps, same thing, moved down, moved up. Once we break this trend line, we can short. Let's go back to USO just to show you what I mean again. Not USO, I'm sorry, TLT, that's the bond, sorry. Drop down, move up, little channel. If we break this channel to the downside, we can short this. So basically, this is an overview of the gold, crypto, oil, and bonds, and then we are moving to market internals.